A very good afternoon, everyone. Welcome to uLaw CPD webinar. Our topic for today's session is Law Society Bookkeeping Compliances. And we're going to be discussing a few items that are going to be important for maintaining yourself with your books according to Law Society, as well as for your annual report filing. Since we thought we're closer to the date, maybe this could be more like a refresher session for all of you, and we hope you find it useful. This session is being recorded, and it'll be available on our YouTube platform as early as Monday. We also have a 1 hour of professionalism CPD credits for the session. Topic details as well as the link for today's session will be shared towards the end of the webinar. I request all of you to hang in tight so you could make a note of the link. At any time you have any questions, please use the chat window so that I could take a look and try to answer in the due course of the webinar or towards the end. I hope I'm audible. Would really request one of you to use the chat window to let me know if you're able to hear me well. For the ones who don't find audio quality great, I would really encourage you to switch to the phone audio. No news is good, I think. I hope everyone can see my screen, hear me well. Any one viewer can let me know in the chat window. Thank you. Awesome. So we have a small agenda for today's session. Even though we're going to be talking a lot about compliances, reports, document generations, we are also going to focus on the process as to how you can achieve the bookkeeping compliance in maybe some for 10 minutes, some would take 3 hours, some would take an hour. Totally depends on the volume of transactions for your business, as well as the software you're using, and what was the process or the method that you have been following or would be following to maintain them and to track them rather. And when I mean track them, track your expenses, track your income, track your withdrawals, deposits, to be honest, and recording them appropriately. What really takes time to get there? That's what we're going to discuss in a nutshell today, and the agenda covers all of it. We're going to see what are ledgers, what are journals, what are reconciliation documents, what are the other compliance documents like fee book, Form 9A, and other bookkeeping documents that you would be seeing under the compliance tab if you're a uLaw user. We're also going to see the most important thing of today's session is the benefit of using a legal accounting software, especially like uLaw, that will help you cover all of these and try to keep your time spent to minimal. So that way, your intervention for bookkeeping is optimized and more efficient, if I could say that. All right, so let's straight away dive into accounting systems. Now, as we all evolved into the process, early days, there used to be a manual data entry. I don't think anybody does manual data entry today, but if you're a old school person, you like to keep things manually done, like, maintain paper pen, then you need to ensure that there's a double entry, like every withdrawal and every deposit hits the right bank account and also the right, creditor or debtor or, the other party who is either paying you or you are dispersing to them. So manual double entry is basically more time consuming, especially with larger number of transactions. If you're a partnership firm, or if you're a corporation with large number of transactions, this is not really easy, but more time consuming, and doesn't automatically post into subledgers and makes its own journals. You'll have to do it manually again. And let's say you take OneWrite, which is again simple, inexpensive. These are all inexpensive tools or methods, especially considering that you don't have any third-party intervention here. So time consuming, again, those are the disadvantages, and errors that could be made in common. The next one is the spreadsheet software, which still many people are using in spite of us coming up with a lot of these softwares today, because spreadsheet is very commonly used, and it does post to subledgers, but and produces financial reports, definitely helps you do all of those, but still needs more of your intervention, time consuming, requires a lot of training to enter the double entry into the respective accounts or subledgers and ledgers. And as we evolved into the software system, that's when came up the general accounting software, like, you can say Xero or QuickBooks or some of these that are generally used by different businesses and individuals that would need to track their accounts. But these are not just legal accounting software, they're general accounting software, which would help you with calculation, posting to ledgers and subledgers, produces all the financial reports that a common or a general accounting software would do, like billing, balance sheet, P&L, trial balance, and such things. Of course, these are not designed for trust accounting. They're in general accounting for, general accounting purposes, and requires yourself to be trained again. Whereas one of the most preferred and one of the most, I would say trustworthy is your legal accounting software. Any legal accounting software that is designed for trust accounting are basic requirement. Helps you with automatic calculations, document generations, posting into subledgers, ledgers, produces all the financial reports, including reconciliations, including fee book and Form 9As if you're an Ontarian who does transfers from trust to general electronically, and everything that a legal accounting software should be doing to keep yourself compliant with Law Society. And of course, this is expensive than the other tools or other methods that we've discussed so far. And it also requires yourself to be trained and get used to the software. As you progress in, you may have, the need, because you'll have multiple bank accounts to be reconciled. You'll have to keep track of each and every expense or withdrawals and each and every, deposits either into trust or general respectively, whether these are client payments, whether these are trust account deposits, retainers, or other trust deposits. You will need to understand them and appropriately add them so the reports that get generated are accordingly. The next one here that talks about ledgers. So we're getting into these documents that gets generated as we progress. Number one being ledgers. There are two types of ledgers: trust ledger, general ledger. And the other set of compliance documents that we're talking here about is journals. We have four types of journals, which is your trust receipt journal, trust disbursement journal, general receipt journal, general disbursement journal. Each of the bank account has two types of journals, being for incoming wire, outgoing wire, respectively. The next comes our miscellaneous compliance documents or additional compliance documents, which are fee book and Form 90s, deposit slips, and cash receipts, etc. We're also going to be talking about, the reconciliations as we get into the system, understanding how it's being done. And I will be walking you through all of this using our platform so that you get an idea as to how it's done on uLaw. All right, so any questions so far? I would be happy to take it on the chat window. Once again, topic for today's session is Law Society Bookkeeping Compliance, and tell us how long it takes for you. Why don't we use the chat window to understand how much time it takes for you on a monthly basis for reconciling and maintaining your books. It'll be fun to know how long it takes, and probably we could towards the end of the session, see if we can reduce that or we can improvise that. Will be nice. To start off with ledgers. Now, many times when we are capturing the data, we are so focused on the amount. Sometimes we tend to miss the method of payment, or we tend to, record it wrong, or we don't pay rather more attention to it. So, I just want to emphasize on the importance of your data entry that would go back into these sub-ledgers or ledger postings, which is in turn shown on the documents that gets generated as part of the Law Society Bookkeeping Compliance. Let's take this very instance here. As you all can see, there are two screenshots or two pictures that shows you the trust ledger for both client from trust and general. And ledgers are documents that would show both amount received and disbursed for the same client, which needs to be recorded in both of these ledgers respectively if you get money into trust or into general, money disbursed from trust or out of general respectively. Now, when you take a ledger which has also a running balance as to how much was in the account, how much was rather received and then in the account, and then disbursed and out of the account, what is the running balance? The first instance, as you all can see, this particular client has a trust ledger with a mortgage advance as a receipt that came into the trust, and then that was transferred into the respective party, maybe the buyer or the seller or the other lawyer, and that was dispersed, and that's called as disbursement, and the balance respectively is zero. Likewise, when you look at the client's general ledger records the invoiced amount. What is the invoice number? You see all of those particulars there. And alongside that, if there were any disbursements, fee, and with HST, which are without HST, what was the payment on that account, and if there is any balance outstanding. Everything is very, very clear there. And these are the ledgers that also shows running balance by the date. So as on July 2nd, the invoiced amount was $113, which is $100 plus $13. I'm referring to the client's general ledger on the right-hand side. So as we raise an invoice, what happens at the back end is when an invoice is raised for 100 plus taxes, which is 100 plus $13 in case of HST, the $100 goes in as a legal fee and probably shows in your revenue report and your fee book that gets generated as 100 plus. The HST goes into your HST report as HST receipt billed to the client. Sorry, something just happened and I think I got dropped. I hope everybody is able to hear me. I would really appreciate if one of you can put it on the chat window, please. Yeah. Okay, great. Thank you so much, Natalie. Let me continue. So I was talking about the ledger posting and the subledger posting that gets into the respective ones when you raise an invoice. So as you raise invoice, the $100 or $100 gets into your fee book, and the $13 goes as a HST that you receive that needs to be remitted to the government. So it goes under the HST payable account. And that way you will also see the balance outstanding from your client, which is going to be shown under your accounts receivable. So, there's going to be respective debits and credits. And as it gets fulfilled, they get knocked off, and that is when the balance outstanding becomes zero on the second line item when the client actually paid, and that's called as the payments on the account. So the AR then becomes zero, and your fee book will have the payment accordingly recorded. While that's what happens with the ledger, with both the transactions being recorded in the trust and the general respectively, with all the dates and the invoiced amount and the respective numbers. Everything shown, which gets captured, because this is where your data entry skill has to be to the T. As you enter the data, or you use a software like uLaw, which will prompt you to ensure that you are entering them to the, exact details or information that you need to provide us with, including the method of payment or the reference numbers. And because that's what gets later on transferred into these documents that gets generated from your bookkeeping compliances. So it is important for us to note down that the minutest of the details goes a long way, especially when it comes to maintaining the books. So if you are someone who, never followed, especially with the method of payments, or rather didn't pay much attention, this is definitely an example for you to pick up and start following them from now on. And about the journals. Journals are of 4 types. There are 4 different documents. 2 for trust, 2 for general. 1 each for a single type of activity, either a receipt or a disbursement that are maintained for both trust and disbursements. As the journals are recorded, the method of payment, purpose, etc., everything is being entered in there. The following samples that you see here, right, are having all the information as to the date, source of funds, particulars, what was the purpose, whether it was a retainer, whether it was other trust deposit. These goes from the descriptions that you enter in. So we have to be careful, at the same time precise of what you're entering in there in the particular transaction while you're recording it, making sure they're, all accurate. So that gets transformed, or that gets transferred into these respective documents, very similar to what you're seeing. Date, source of funds, purpose of funds, amount, and the method of payment. One step more in uLaw, we also have a payment reference field where, all the reference numbers that you enter in will also show up accordingly. And when you take that is about the receipts for receipt journal for a trust. Now, when you take receipt journal for general, it shows you date, again, source of funds, amount, and method, but slightly differently with the invoice numbers, because it shows the invoice number and also the amount against it. And when you take a disbursement journal here, you see there are dates, there are check numbers because you are dispersing using either check or any other method of payment respectively. It could be a email transfer, it could be a check, it could be a bank draft. Whatever is your method of payment, you specify them in the entry, and that gets into these respective journals. In the disbursement journal, what I would find additional really important is your method of payment and the reference numbers, because it's easier for you to track down your checks, especially whether it has been cleared or not, outstanding, when you're doing your reconciliation. So it is important for you to note them down. Hi, can you hear me now? I'm sorry, I think there's something wrong with my join here, the platform that I'm using. Okay, great, thank you. So I was talking about the method of payment and the reference number. I'm just trying to emphasize that, one of the tips here is that when there is a method of payment and the reference number that is captured properly in a transaction, it gets recorded into your entry. That way, when you are doing a reconciliation, you are able to refer to that method of payment or the reference number and then ensure whether the checks are cleared or not. This is just a tip to make your reconciliation and your bookkeeping compliances more smooth. And so that's one of the reasons why in uLaw we have mandated the check numbers, so it becomes easier for you. All right. Also, the other documents here that talks about fee book, Form 9A, and other things. So let's talk about fee book. So fee book being a document that captures the invoices that has been raised with the appropriate amount of fee and appropriate amount of disbursements, if any, and the total with the HST before and after. So this is what, of course, along with the invoice numbers, which is very important, so that, if you find any invoice not being paid for or any invoice not being generated, there's some issue where you're not able to identify the details. Fee book comes handy, where it shows you invoice number, which client it was billed for, and all the taxes that was associated with it, whether it was tax exempt or not, everything that is being demonstrated, as you can see here on the fee book. And fee book records all of the invoices information right from the respective date that you're generating it for, including the disbursements that was raised under that specific invoice. And as you progress in, there are other documents that are also, pretty important. Are Form 9As. Whenever you transfer money from trust to the general, if you're a uLaw user, and you have selected very accurately electronic fund transfer, then it will allow you to download the Form 9A automatically. And if you have recorded your banking information under accounts under each of your bank that you reconcile for, trust or general or respectively, you will be able to see the banking information also auto-populating. So this allows you to save time and hence you have the electronic fund transfer requisition forms handy. So Form 9A again, whenever you transfer money from trust to the general or whenever you pay out of trust using an electronic format, electronically transferring money from trust to the general or a payout of trust using an electronic form will have to be backed with Form 9A, which provides the amount that was debited from the trust alongside with the details such as who it was provided to and what was the the purpose of the funds that was transferred for, whether it was your legal fee or whether it was any disbursement, such things. And as you progress, you will also find the need for these Form 9As as part of your, monthly reconciliation documents. The next one that we're talking about here is your deposit slips, cash receipts. And these are basically when you have anybody providing you with cash and you deposit it into your bank, making sure that you have generated these cash receipts to give them and your deposit slips to put it into the bank and rather deposit it into the bank. And we also have other documents where you can do your monthly reconciliation and also, other documents that you would see under our monthly compliances. So when you go on to uLaw, if you're a uLaw user, under accounts, under compliance tab, you have everything you would need for your monthly compliances. All right. Any questions so far? I'm currently on how do you manage all of this, especially when you're using a program like uLaw. For seamless accounting, what do you do? What are some tips that I could share with you all? Now, every accounting entry has a double entry, which means that whenever you are incurring or recording a transaction that you've incurred, it needs to touch two accounts, which is where debit and credit comes into place, and which is where you need to make sure to record the items appropriately. So if you are using a software, it will allow you to just enter whether it's a payment, and all the subledgers and journal posting happens at the back end. And then the same information is recorded, as you are entering them into the respective subledgers or ledgers. And if you are not maintaining these books on a regular basis, there could be times where you could record the same information again without knowing or without remembering that it was already done. So I would really encourage a real-time data entry, at least on a weekly basis, if not daily basis, so you can reconcile your books on a weekly basis. And even though what Law Society says or mandate or has mandated is only to reconcile your trust on monthly basis, especially by 25th, on or before 25th of the month. Let's say today we're on 21st, and before 25th of March, you would have to reconcile for end of February. So, but it is also equally important to focus on your general account, as you know that not everybody has trust accounting alone. There's also a lot of debits and credits that happens in your general, and a lot of client payments, a lot of withdrawals, which needs to be maintained so you do not have any mistakes or any errors in your accounting. So for the same, it all begins with using a software and making sure that you manage it right from the time of client intake, service communication, to matter management, to, basically matter management is where most of your accounting also takes place, because most of the accounting revolves around your client paying you, you raising invoice, and then transferring money from trustee general or retainers or disbursements or client payments. Most of the 50 to 60%, or I would even say 75% of your accounting happens at the matter management level. So making sure that your matter management has to be very seamless so you can prevent errors and make reconciliation more simple. So it's not always the other way around. You don't go from accounting to the matter, you go from the matter to the accounting. So this is my method, which has really helped many of them to keep their books and reconciliations up to date, help them record all the events as and when they happen, and automatically maintaining these ledgers and journals, which will eventually get to a point where reconciliation is just a 10 minutes work. Now, this is why we say whether it takes you 10 minutes or 3 hours. Trust me, I know on an average basis for a volume of maybe 40 to 50 transactions, or depends on 25 to 30 transactions, would not take you more than an hour. But let's put it as 1 minute per transaction. But this is only for reconciliation. If you backtrack it, there's so much that goes behind it in order for you to achieve that 10 minutes or 1 hour. That's what you need to focus on. That's where, and the focus is about data entry. The focus is about managing all the events as they happen and record them appropriately. So the seamless accounting, the key point to note here is translating your matter management workflows to a seamless accounting to save time, prevent errors, making reconciliation all simple by focusing on every tiny bit of information with the date, the amount, the particulars or description, the method of payment, reference numbers, and all. Last but not the least, legal accounting software does it all. I don't have to say anything more, as you all know that as a uLaw user, if you're on here today, as and when the event happens, uLaw prompts you to record them, rather facilitates you to record them. You can use the mobile app, you can use the browser, you can use your email, and connect them to uLaw as you read or write, making sure you docket each and every item, you raise your invoices on time, you collect your payments on time, or you move money from trustee general on time, you get yourself paid, you enter them all respectively in those matters and accounts. Recording financial transactions as close as possible with your bank statements. You don't have to wait for your bank statements to always be populated. So if you wait, then you're going to be always 1 month behind. This is a simple tip that I would like to always give. So don't wait for your bank statements. Again, don't wait for the month to complete or the week to complete. So your bookkeeping should be parallelly happening as a transaction or an event occurs or happens. How? You want to give or issue a check to somebody, use uLaw, use the matter, record the disbursement from uLaw, and issue the check from uLaw. That way, 2 in 1. You're able to record the transaction, you're able to issue the check, which looks more professional, and you're also very close to your bank. On the same day, your bank and uLaw matches. That's what makes reconciliation a very simple task. This is a real achievement, but this is like, I would say, the best thing to do, because you don't wait for you to stay compliant, you always stay compliant. Finally, it all boils down to compliance, accountability, analytics, all for ease of use. Analytics, again, you want to measure your growth, you want to measure your financial health, you want to measure your clientele base. You know, there are so many things that you can measure when you're to the point. So use a software that will help you to be on top of everything. That's what I would like to say and end the presentation, but take you all to uLaw and show how you could achieve it further. I would be happy to take any questions. This is a perfect time for you all to start entering your questions so I could show you all using our uLaw platform simultaneously. I am going to walk you all through in the next 20 minutes everything that you can learn about bookkeeping compliances right from the time you come into uLaw, enter a client with a matter, file, accounting, raising invoices, collecting payments, and whatnot. We're going to see this end-to-end for a file. Let's create a new file so that we're not confused with the transactions in it. But please use the chat window for any questions or any, I'd say, situations or scenarios that you'd all like to see. I would be happy to keep this more, more user-friendly, and you could understand how things work better. So creating a new client. And just basic society compliances that I'm trying to follow here. Okay, so you have the address in. Okay, save. Just a very basic one. Of course, you need more details as you progress in, but to keep it short and quick, the first thing that I would like to do as part of bookkeeping compliance is, like I said, it starts right from the beginning, right from the time you intake a client to the time you service them, and then you have everything up to date over here. So start off there, and you want to do your conflict check, make sure there's no conflict, see to it that you also have entered the source of contact. I only created one client today in this file, and it has been very specifically, I put it under or classified it under internet advertising, and it's right here showing up. And I also have the conflict checks showing up here with the similar sounding name or the potential conflicts here for all of you. Okay, so my first level of bookkeeping compliance or law society compliance documents here. Then when I go into the matter, now I'm ready to open a matter. Write about the name, click on matter, open the file. Let's say this is a landlord tenant board. Classify the area of practice, your hourly rates, save it. So the bookkeeping compliance that we are talking about is about 6 different or 8 different documents. 2 ledgers, 4 journals makes it 6, fee book 7, form 9A 8, and your other 2 compliance documents that I would call is trust and general reconciliation, as well as your expense book and multiple account reconciliation. If you have maybe intermatter trust transfers, anything, that also shows up. Now, to get to this, What really matters is your data entry. Let's say you service the client, you're planning to do a legal fee, flat rate. Okay, you want to add in $1,000 plus taxes and save it. And as you save it, you would go in for you would be raising an invoice. Before you raise an invoice, let's say you have a disbursement to show how the disbursement is being recorded. So you have an add new disbursement. Now let's say this disbursement was paid from trust, so you then realize there has to be a retainer. So immediately you want to get a retainer. So you want to send retainer letter to your client, ask them to pay you into the trust account. And once you have the retainer being paid, give them a receipt. Remember, we spoke about cash receipts, in general receipts, the completion of the information that was completed here that you can see is up to date. So you can see that I've added in all the information that is available to me, the date, amount, method of payment, reference numbers, who it was paid by, received from, and that would give me a very complete receipt with all the information. Also, this gets transformed or this gets addressed into the respective ledgers and journals, which I will be downloading in a few minutes to show you all. Now, you know that you have a little amount in your trust, so you're going to add in saying that paid from trust, you have a filing fee or something that you would like to use it for. So this is where I say try to keep uLaw parallelly working with your bank. So right now, let's say you have 500 in your trust and you'd like to utilize 150 from that towards paying the filing fee or a court fee or whatever. And then you use that, enter the date on which you're going to generate the check amount, check number, as you see on your physical check, and then who are you paying it to. So if you want to pay it to a government and print a check, click on payments, then download. Okay, right here. Go back in there, complete the invoice now. Okay. I'd like to also show you all another disbursement from general. You have paid for this from your general account using your debit card. You have the reference number. Save it. Now you have a flat rate. You have trust receipts. You have disbursements from both trust and general respectively. Let's now raise an invoice to see how this looks on the respective journals and ledgers. So once you raise an invoice, there are two things that you could do. There can be a transfer that can happen from trustee general for the amount that is available in your trust, and also share the invoice with your client so they can pay you the remaining, which is your accounts receivable from the client for the balance outstanding, which is in this case $864.75. So as you all can see, there's 1,000 plus taxes, which is the legal fee. In the next page, we have the disbursements. We have the retailer and what was taken out of trust, disbursement from trust, and the balance due. So when you go back, you click on question mark, you start taking action to complete this activity. Again, you're doing this simultaneously in the bank. You do this in the bank first, in fact, and then you come back, do it in uLaw with the record it in uLaw with the reference number. So this is the Form 9A that we were talking about. This is how it looks, as in like this is how it's done to generate a Form 9A. Once you download the Form 9A, my address and everything is recorded. Within 10 seconds, I have it out. The Form 9A records all the requisition number, the method, funds, and other things. We go back. We are going to get the other payment from the client. Somehow it's not getting completed. Just give me a second. Sorry, all of you. Okay, that's because I only selected for the disbursement that time. So let me do another fund transfer here, complete it, and then show you all how this matter looks further. So the client now owes you 864.75, which can be entered in once the method of payment is also entered in. If the client makes the payment, you are entering it here respectively and apply. Okay, so now let's go into accounts to generate these documents. So whatever I've recorded in the trust and general respectively shows under the trust with today's date especially. As you all can see under pool trust account, $500 with the deposit, the retainer. 150 was disbursed, which was directly made out of the trust. And we also have the 84.75 trust transfer for courier fee and 265.25 for the legal fee. And the remaining gets paid into the general account directly, which is under this. So right now we have the client payment over here. When I go into compliance to download the first set of ledger, today's information, client trust ledger, as well as client general ledger to show you all how the transaction looks. So this is our trust ledger. with the activities that has happened in the trust, both receipt and disbursement. On 21st March, received $500 with the particulars as retainers, with the email transfer was the method of payment and the reference number, highlighting the same, as well as disbursement out of trust was other payout of trust for filing fee, and the method of payment along with the reference number as well entered in here and highlighted the same. Following to which an invoice was raised and the money was transferred from trust to general. Invoice amount will be shown under the general. However, the trust transfer is what will be shown here, which is under the disbursement. Net, what is the balance remaining in trust is $0. As you all can see, next one being the client's general account. We have the client's general account with all of the information, including the particulars, the invoice number, and who was the client, which is also there on, client's general ledger. Today, I only worked on one, so you're only seeing one. The invoiced amount plus taxes, including taxes rather, and for both legal fee and disbursement separately, and what was the amount received, payments received into the account, which is called as payments on account. We have the amount of $350 transferred from trust to the general and $864.75 paid by the client directly into the general, with the respective details as to the method of payment, with the reference numbers, whether it's a client payment or whether it was a trust transfer, and the other details such as invoice number and the disbursement with courier fee details, etc. Now, this is the ledger item that shows both receipts and disbursements. As you progress into a journal, I'd like to show you all what is a client trust receipt journal, a client general receipt journal, client trust payments, what was received into the trust, what was received out of, what was paid out of trust, my bad. And then general disbursement, what was disbursed out of general. There are 4 types of journals, showing you all one by one as to what happened. In the journal, taking only one type of activity, trust receipt journal shows the money received into trust. What was the amount received into trust? There was $500. How was it received? Through email transfer, the reference number. What was the purpose? It was a retainer. What is the file number that is recorded under source of funds? This is where we capture who paid for it. When it could be the spouse, it could be the other party, joint retainer, it could be anybody. But as you progress in, you would need to enter them respectively. Okay, and the next one here talks about receipt journal into the general. In case of general, the amount was received from trust, $350, and directly into general with the reference numbers and the method of payments respectively. We also have the method of payment here, respectively recorded under the columns or particulars. Lastly, disbursement payment journals, which are the disbursements made out of trust. This was a disbursement made out of trust directly, followed by the trust transfers with all the respective information, including the method of payment, who was paid to, what was the matter, and what was the particular or the purpose of payments. Another one, which is the general payment journal. Any payments made out of general account in this case was a courier fee using the debit card, the method of payment, who it was paid to, courier fee. So these come handy when you go to reconcile with all the respective method of payment. Lastly, let's take a look at the fee book and whatever was the legal fee that was raised today with the disbursements, the breakup, and anything following to it. And fee book here also shows the client information. Today I only built for one client, otherwise you will see all the different clients. And the legal fee with the descriptions, fee before taxes, and the total, of course, the taxes is also captured in here. We also have expense book, which are part of other documents to show you any expense. In this case, we had the general disbursement, which was the courier filing fee out of the general account. We have again before taxes, after taxes, all captured in there. Of course, the trust and the general reconciliation again captures all of this data that we have, including the invoice number, the checks if there was anything disbursed, and all of it. So this will allow you to clear a few checks as you progress into the account. And if there are any checks that are not cleared, so you can look at the check number while you're trying to reconcile your books and enter in them respectively. As you all can see, this is this is like kind of a playground account, so it's taking a bit of time to load. But while that happens, I just want to let you all know that this is probably what I wanted to show you all today as part of bookkeeping compliances. From the time you could capture the information with all the details parallelly to the time you could take it to the reconciliation with all of the information that appropriately matches with your bank statements, takes off most of your, uncertainty in terms of reconciliations, because all the details are up to date, matching with the records, and that will leave you with very less chances to not have a book reconciled under a few minutes. So if you were able to achieve the data entry in a complete manner, I think your reconciliation is a very simple task. So as I said, I'm waiting for the accounts to load. It could take some time, but please try this at your end, all of you, to have a very smooth reconciliation and the bookkeeping compliance process. So if you all have any questions from today's session, I would like to open the floor for any questions. And as I mentioned, we do have a live Q&A happening in the next week, because I did ask everybody for the last week, but I didn't have many people answering. So if you all are, keen on participating, I would be happy to know on the chat window if there is any specific day for all of you to, choose. I'm going to again share the same link for you all to vote. And if you all can, I will also be sharing link for the attendance for today's session. So if you all have any further questions, I would be happy to do a live Q&A next week regarding the same topic for bookkeeping compliances, since annual report is coming to close. Annual report filing deadline is coming to close. I would like to have a more interactive session, which would be really helpful for all. But however, since we're planning to do this on our Instagram platform, where many users can benefit, many non-uLaw users can benefit too. I was wondering if people like you who are here today could go and follow us on Instagram firstly. So that would, help you to attend that session first. And we also have other followers who would also be able to attend us. Okay, I do have a very nice question coming in here. When you remove funds from trust, do you create a 9A only when you write, only when you wire funds out, or when you write checks and anything? See, Form 9A is only for electronic fund transfer. That's very clear. But there's also something called as Form 9C. So if you had selected check or as a method of payment, and especially for any of these that will allow you to download a Form 9C as part of compliances. Yeah, but to answer your question, Form 9A is only for electronic fund transfer. And when you write checks, you can download Form 9C. Awesome. I'm going to share the attendance link for today's session. I've already shared our Instagram link. I would really appreciate if at least the attendees from today's session go follow us, because we have a lot of information that we constantly post there who only our followers can see. And if you are someone who are regularly attending our webinars, I'm sure you could benefit from our Instagram as well. Oops. The topic is not matter management, my bad. I'm just going to change the topic. Topic for today's session is bookkeeping compliances. It's again accredited for 1 hour of professionalism CPD credits. I have another question. So there will always be some form to fill out when removing funds from trust. Yes, that is mainly when you are removing funds, either using electronic or check. Yeah, that's what mostly people use. And if I'm not wrong, check is for Form 9C. I need to kind of get back, because for Form 9C is something that is being used for removing funds from trust for closing funds. If I'm not wrong, it is only for real estate lawyers. That's what as far as I know, is Form 9A is for electronic trust transfer, and Form 9C is for electronic trust transfer acquisition using for any closing funds, for money that gets transferred for bigger numbers, like the real estate ones, which is called as closing funds. So if you are not a real estate lawyer, I don't think you need to be doing Form 9C, because there's no closing funds requirement in your case. So Form 9A is what predominantly people use, and Form 9C is for electronic trust transfer, again for closing funds or for check for closing funds, which is any format in which you use to transfer the closing funds. If you are still confused, I'm going to post a link here that would allow you to check about the same. Of course, HTTPS is the hyperlink. I would love to show you all where exactly this gets. There's a proper link for you all to read. It's more like a resource material. Would really appreciate, especially the one Laura asking question. This could be helpful for you. Any further questions, you're welcome to share. I would be happy. Okay, I'm going to be posting the link here. Please take a note. It talks about Form 9C. So it's only for closing funds that gets transferred, but Form 9A is for any funds that gets transferred electronically. Perfect. Since there are no further questions, I'd like to at least stop the recording to keep it short for others using it. And for any further questions, I'll be here for another 8 minutes. Please use this opportunity to also vote for the live streaming next week. And for anybody who require further assistance for bookkeeping compliances, please do join the live Q&A for all your questions, and follow us on Instagram for the same. Thank you and have a wonderful day.